Welcome to the discussion video on the computational part of the partnership formation. So let us illustrate the formation of partnership, the valuation of capital. A and B form a partnership. The following are their contributions for A and B. So cash, accounts receivable, inventory, land, and building has been contributed to the partnership. So si A, nag-contribute siya ng cash 100,000, accounts receivable 50,000, inventory 80,000, B naman 50,000, building 120,000. So the total contribution is 230 for A and 170,000 for B. Included in the contribution of A is a 60,000 note payable. So before we proceed in the valuation of the capital contributions of these partners, let us go back to the rules we have established. For cash items, it is said that the contribution for cash items is recorded at face amount. So since cash is 100,000, it is recorded as 100,000. So for non-cash items, we recognize non-cash items based on the rules we have set. So for accounts receivable, 50,000, it is recognized at its fair value. Inventory, it is recognized at its lower of cost and net realizable value. So let us determine by looking at the additional information. So additional information included in the accounts receivable is an account amounting to 20,000 which is deemed uncollectible. So part daw dun sa 50,000 na accounts receivable ay may 20,000 na uncollectible accounts. So 50,000 minus 20,000, dapat yan na lang ang net contribution ni A para dun sa AR na 50. The inventory has an estimated selling price of 100,000 and estimated cost to sell na 10,000. What is the rule on inventory? The lower of cost and net realizable value. So how do we compute for your net realizable value? The selling price minus the estimated cost to sell. 100,000 minus 10,000 is 90,000. So yan ay 90,000. 90,000 i-compare mo sa cost na 80,000. 90 minus 90 and 80, which is lower. The lower is 80,000. So ang contribution ni A for inventory shall be valued at 80,000 because it is the lower of the cost and the net realizable value. Next, the partnership assumed a 10,000 unpaid mortgage on the land. So the land is valued at the fair value 50,000 but meron siyang assumed liability ang partnership na 10,000. So yan ay i-consider in our computation. So let us compute. But meron pang mga ibang additional information given. The building is under depreciated by 25,000. There is an unpaid. So ano ang treatment sa under depreciation? So i-depreciate mo para ma-reflect ang kanyang fair value. There is an unpaid mortgage of 15,000 on the building which B agreed to settle using his personal funds. So ang sinasabi sa rule ay yung inassume na liability ng partnership. So kung yaang unpaid mortgage na yan ay isa-settle ni B using the personal funds, so walang i-assume, so i-ignore mo lang yung 15,000. Next, the note payable is stated at face amount. A proper valuation requires recognition of a 15,000 discount on note payable. So bawasan daw ng 15,000 yung note payable kasi may discount pala doon. A and B shall share in profits and losses on a 60-40 ratio respectively. So what is the requirement? The requirement is to compute for the adjusted balances of the partner's capital account. So let us take a look at how it is done. Yung contribute ni A for na cash 100,000 is recorded at face amount. So same lang yun, 100,000. Accounts receivable, 50,000 yung kinontribute niya but 20,000 doon ay uncollectible. So ang fair value na lang yan ay 30,000. Inventory, dinetermine na natin ito kanina at cost 80,000 because that is the lower amount. Doon naman sa land, 50,000 ang kanyang fair value pero may inassume na liability ang partnership dyan, yung 10,000, kaya nandito siya sa deduction, yung mortgage payable for the land. Next, yung building, 120,000 ang value ng building. However, sabi under-depreciated daw siya ng 25,000. So, 120 minus 25,000 to reflect the fair value, that is 95,000. So, the total contributions of A is 210,000. 100 plus 30 plus 80 is 210. For B is 145,000. That is 50 plus 95,000. The assumed liabilities of the partnership for the note payable, 45,000. Why 45,000? Because there is an unpaid mortgage of 50. How do we compute for the note payable? It is determined that there is a 60,000 note payable on the first instance. Let us take a look. 60,000 ang original amount ng note payable, and then ang sabi dito, a proper valuation requires the recognition of a 50,000 discount on note payable. So hindi 60,000 ang note payable talaga kasi may discount. So ang i-assume lang ng partnership is 45,000. Yung mortgage payable for the land is 10,000. Okay. So for the contributions of aid, the net contribution of A is 210,000 minus 45,000 is 165,000. For B, 145,000 minus the assumed liability na 10,000, the adjusted contribution or the net contribution of B is 135,000. So whatever the total of the net contributions will be the total partnership capital. So 165 plus 135 is 300,000. Okay, let us take a look at some items. The unpaid mortgage on the building is not included because it is not assumed by the partnership. Okay, yan yung in-explain ko na kanina. So let us journalize the transactions. Looking at the transactions, we debit cash 100,000, debit accounts receivable 30,000, debit inventory 80,000, debit land 50,000, debit building 95,000. So kung magkano yung naka-reflect na valuation, yun ang i-recognize mo na asset accounts ng partnership. Debit yung discount on note payable. So discount on note payable is a contra account on the note payable kasi nga yan ay merong recognition daw ng discount dun sa note payable na inassume ng partnership. So then credit note payable 60,000. So eventually ibabawas yung 15,000 doon sa note payable na yan. Then credit mortgage payable na 10,000, and then credit A capital 165,000 and then B capital 135,000 because we already established that the capital accounts have a normal credit balance. So yan ang kanilang capital accounts. Okay, let us proceed with the requirement B. Assume that the partner's capital shall be increased accordingly by contributing additional cash to bring the partner's capital balances proportionate to their profit and loss ratio. Which partner should provide additional cash and how much is the additional cash contribution? So kanina sinabi on the additional information that A and B shall share in profits and losses on a 60 and 40 ratio. So the requirement here is tinatanong kung sino ang magpo-provide ng additional cash so that yung capital balances na ibinigay ng bawat partner will be equal to the profit and loss ratio. So let us compute for this. The partnership formation problems has been very dominant in the CPA review and then in the CPA licensure exam. Hindi nawawala yung questions related to partnership formation. Kung sino ang dapat mag-add ng contribution, sino dapat mag-withdraw ng investments, in consideration with the profit and loss ratio, yung kung baga yung kinontribute nila ay papaanong magiging equal doon sa profit and loss ratio agreement ng bawat partners. So let us take a look. Madali lang naman siya on kapag nakuha natin yung concept kung paano siya ginagawa. So let us look at this, the solution. So using A's capital first, let us determine if B's capital contribution has any deficiency. So i-determine muna natin kung meron bang deficient doon sa mga kinontribute nilang capital. So kinompute natin kanina, let us go back. Ang sabi dito, the capital of A is 65,000 and the capital of B is 165 and 135,000 respectively. So using A's capital, let us determine if the capital contribution has any deficiency. So A capital is 165,000. Ang sabi, 60 and 40 ratio respectively for A and B. So yung 165,000 na capital ni A, dapat yan ay 60%. So 165,000 divided by 60% is 275,000. Sir, bakit po din-divide? To arrive at the total partnership capital, 275,000. Then multiply it to B's profit and loss sharing ratio na 40,000. So 275 times 40,000 is 110,000. So this is the minimum capital required for B. So kung ang 165, kung ang 60% daw ay 165 using A's capital, dapat 110,000 ang capital ni B. Magkano ba ang capital ni B ngayon? 135. So, meron ba siyang deficiency? Wala. Dahil sobra pa nga siya ng kinontribute. So, the conclusion is the B's contribution has no deficiency. Then, let us look at using naman yung B's capital para ma-attest natin kung talagang kung magkano naman ang deficiency sa side ni A. Now, using B's capital, let us determine if A's capital contribution has any deficiency. B capital is 135,000. Ito yung kinompute natin kanina, divided by the profit and loss sharing ratio na 40%. The total is 337,500 times 60%, which is the profit and loss sharing ratio ni A. The minimum capital required for A is 202,500. A's capital is 165 ngayon. So, dapat 202,500 siya para 60% yun ng 337,500. Pero ang capital niya lang ngayon ay 165,000. Therefore, merong deficiency on the part of A sa kanyang contribution. Kasi ang kinontribute niya, 165, pero ang dapat ay 202,500. So, therefore, partner A shall contribute additional cash of 37,500 to make the contribution proportionate to the profit and sharing ratio. So, dapat ay mag-contribute ng 37,500 si A para ma-achieve yung 60-40 profit and loss sharing ratio. So, let us reconcile this. So, A's contribution, ang original contribution ni A ay 165,000 plus ang kanyang na-compute natin na additional 37,500, that is 202,500. So, B's contribution is 135,000. So, adjusted total contributions na natin ay 337,500. So, i-check natin if it will yield to the present contribution. So, kung 337,500 ang total partnership capital times 60% based on the profit and loss sharing ratio agreement, 202,500 ang A's adjusted contribution at 135,000 naman ang 40% for B's contribution. So, na-achieve na natin yung 60 and 40% profit and loss sharing agreements. Okay, now let's proceed with the concept of bonus. Okay, the bonus on initial investments. An accounting problem exists when a partner's capital account is credited for an amount greater than the fair value of his contributions. So, nagkakaroon ng problema dahil there are instances na yung kino-contribute is less than the doon sa kinredit sa kanyang capital account. So for example, a partnership agreement may allow a certain partner who is bringing in expertise or special skill to the partnership to have a capital credit greater than the fair value of his contributions. In such case, the additional credit to the partner's capital, that is the bonus, is accounted for as a deduction from the capital of the other partners. This accounting method is called the bonus method. So, minsan, meron tayong mga partners na because of their expertise ay binibigyan natin ng consideration or additional credit sa kanyang partner's capital. So, yun ang tinatawag na bonus. So, although the credit to the partner's capital may vary due to a bonus, the corresponding debit to the asset account must still be equal to the fair value of the contribution. So, ito yung diniscuss natin before. Na yung contribution based on PFRS and based on provisions of the standards ay sinasuggest na the contribution should be at fair value. The difference between the amounts credited and debited is treated as the adjustment to the capital accounts of the other partners. So essentially, there are changes on the capital accounts. Essentially, yung bonus ay wala naman talagang bonus on the transactions, but these are mere reduction on the capital accounts of the other partners. So yung expert, yung magbi-bring in ng expertise on the partnership will be receiving an additional credit to the capital, pero in effect naman yun, ang panggagalingan nun ay yung capital accounts ng other partners. So let us illustrate this. A and B agreed to form a partnership. A contributed 40,000 cash while B contributed equipment with fair value of 100,000. So kapag cash, yan ay face amount, so 40,000. Kapag equipment, because yun ay non-cash item, ito ay nasa fair value, so 100,000. However, due to the expertise that A will be bringing to the partnership, the partners agreed that they should initially have an equal interest in the partnership capital. So, ang agreement nila, although 40 lang ang kinontribute ni A, ay at for 100,000 ang kinontribute ni B, masyadong malayo. However, dahil nga daw mayroong expertise na ibibigay si A in the partnership, ay equal ang interest nila in the partnership capital. So, magkano ba ang total partnership capital? E de 140,000. So, kung 140,000 ang total partnership capital, then nag-agree sila na i-equalize yung interest doon sa partnership capital. So, tig 70,000 dapat sila. That is 140 divided by 2 or 50%. So, what is the requirement? To provide the journal entry to record the initial investments of the partners. So, let us take a look at the illustrations. So, ang actual contribution ni A, 40, si B naman, 100,000. So, ito na yon, 70,000. So, under the bonus method, since si A ay, ang contribution niya lang ay 40, na naging 70 ngayon, siya ang nakareceive ng additional credit na 30,000. However, nabawasan naman ang credit sa partnership capital ni B by 30,000. Yun yung dinala kay A. So, how do we recognize daw? Ang sabi on the previous discussion ay yung asset accounts are recognized at their fair values, at kung ano ang rules na applicable sa kanya. Kung cash siya ay face amount, kung inventory siya, lower of cost or net realizable value, kung other non-cash items ay fair value. So, in this case, debit cash, 40,000. Debit equipment, 100,000. Then, credit A and B capital respectively for 70,000. Because of the agreement to equalize the interest on the partnership capital. So, there are notes included here. The bonus given to A, that is 30,000. 70,000 capital credit minus 40,000 actual contribution is treated as a reduction to the capital credit of B. After applying the bonus method, the total capital of the partnership is still equal to the fair value of the partners' contributions. The debits to cash and equipment are equal to their face amount and the fair values. Yung cash kasi, it is treated that the face amount becomes the fair value because kung ang magkano naman talaga ang amount ng cash at face is yun na rin ang kanyang fair value. only the amounts credited to the partner's capital accounts have varied. So it will depend on the agreement. So let us take a look at this summary. So kapag asset contribution of a partner, it is initially recorded at fair value. Okay, check tayo dyan. The liability assumed by the partnership, it is initially recorded at fair value. Okay? Credit to partner's capital account. Either, so it can be fair value, no bonus, or it can be above fair value, bonus to the partner, or it can be below fair value, bonus to the other partners. Okay, that is a summary of what we have discussed. So I think I will be ending the discussions on this part. We will have a second part for the practical computations on the partnership formation and the bonus method in recognizing the contributions of the partners. Thank you.